Welcome to TheoTrade. This is Don Kaufman. Here we are, March 8th, 2016. Let's get it kicked off with the Theo Night video. First and foremost, the S&P sell off. Not massively today, but we did see some downside action. So the question that is probably looming on everybody's mind, we're going to look a little bit more in depth in the markets in a moment, but the question immediately is that it? Is that the end of what has been an amazing rally? And I may have actually found a little bit of an answer other than just looking at the obvious. What's the obvious? Well, come on, the SPX today was down some 22 points. Okay, it's a little bit of a warning signal. You get it. You look at the financials, all right? They got whacked back a little bit today. On a percentage basis, the financials down 1.6%. It's a little bit alarming. But, okay, looking down the list over here, there are a few of the kind of heavyweights that fared well. Okay, yesterday you saw some pain in Netflix, a little bit of pain in Amazon, all right, Facebook. All of those stocks actually pretty much held it together today with negligible losses or relatively flat on the day. However, there's an area that I watch, and I don't sit there all day long, pining for something to find that shows risk, but very few people, I think, look in the direction. The VVIX. The VVIX is the volatility of the volatility index. I'll explain a little bit more about the VVIX, but it is on the move. It's actually up fairly substantially today, up about 3%. It's a $5 move. However, what caught my eye wasn't that the volatility of the volatility index, and you're like, whoo, this sounds exciting. Okay, the VIX itself was up over 7% today. The volatility of the volatility index, like, what is that? I mean, for years, and I don't even look at the VIX so much, but for years, people look at the VIX and it's the fear indicator. So what's the volatility of the volatility index? If you look at the VIX, all right, and the higher the VIX goes, there's risk in the markets. If you look at the volatility of the volatility index, it's almost a measurement, if you will, of not speed of the market, but of acceleration of the market. All right, so some people look at like delta. What's the delta of the delta? It's like the second derivative. So if you think you have a car and the car is going like 80 miles an hour, how fast can that car go from 80 to 120? And that is kind of what the volatility of the volatility index measures, the VVIX, which again, we'll look at here momentarily. So I wanted to kind of kick it off tonight and say, all right, we have a really interesting situation because clearly the market sold off a little bit today. Okay, bonds took back off to the moon, which we'll look at a chart. The interesting thing that I picked up on, though, here's a 3-month of the VVIX. Okay, here's a 3-month of the SPX. Now, I don't like to sit here and do the comparison. Well, this was doing this, and hindsight is beautiful. Okay, here's the key. The key is the SPX in the last couple of days still had upward momentum to it. It faded today. However, the VVIX, the volatility of the volatility index, it actually bottomed out last week. It bottomed out last week, and it's actually been on the move to the upside. It's a full 10 handles, 10 points, that is, higher in the VVIX, okay, and that is in the last 4 trading sessions. So there is an underlying theme here of risk that you might not normally see on the surface of the market. And again, risk is actually feeling riskier than the SPX might currently be displaying. So now let's go back to a regular chart over here. I'll go back to a single chart, and again, take a look at the VVIX. And this is a wild animal kind of a product over here. We'll take it back to a 9-month just to display, okay, how much, again, this product has tendency to move around. Anytime the VVIX gets up north of 100, it's getting serious. In 110 territory, put your helmet on. We are going in. And that means you're as wild as the market really gets. Yes, there was a just incredible reading of 212 over here. Yeah, that was an odd day. It was August 24th, and the markets went limit down. But again, even seeing extreme readings a few weeks back, in the 113 was a little bit alarming, but we definitely have the volatility of the volatility index on the rise to the upside. And all this thing measures, again, if you will, it kind of measures the options on the VIX. It's actually saying, like, how sensitive are the options on the VIX? And the answer is right now, things are getting a little bit more chaotic. The volatility is actually going up on the options on the VIX. And that's, again, what it really measures in there. So it's much more definitive than, like, people are going to look at the S&Ps today and they're going to be like, well, it was a down day. Thank you, Captain Obvious. Like, everybody knows it was a down day today. I mean, look on the screen. The spiders were down $2. Okay. What I think we're actually seeing here could be not just the forefront necessarily of a big down move. Hey, listen, we just saw the S&Ps rally, just a wild amount in recent weeks over here. I mean, we're off the 1800 level, literally 1800. We're back to 2000. That's a 200-point S&P rally. Right now, okay, I'm not going to justify that we're about to sell off. Yes, I am short deltas, okay? More or less what I'm saying is, get ready. I thought the markets were going to have a little bit more rest, okay, in between bouts of volatility, but I think we're right on the forefront of volatility. And interestingly enough, you have this ECB announcement coming out on Thursday. I do not think the ECB announcement, that's the European Central Bank, Mario Draghi, better known as Ivan Drago, it sounds better that way, doesn't it? And what Rocky movie was Ivan Drago from? Think about it. I don't think, per se, that the ECB is going to have much to say. What I do think, it could very well be the catalyst that kind of lights the market back up. Now, that ultimately means volatility looks like it's coming right now. We're going to watch the VVIX very, very carefully in the next couple of days. All right? We're actually getting correlations breaking apart. What does that mean? You got the S&Ps today down, all right? And down, again, pretty good amount over here. You've got the Russell getting hammered. So again, on a percentage basis, things are not necessarily adding up. The S&Ps are down 1%. The Russell's down over 2%. Okay. What did the NASDAQ do? The NASDAQ was, I don't know what to do, was kind of dead in the middle of those. There was actually points today where the NASDAQ was up with the rest of the market and the S&Ps down. Yet, okay, I'm going to show you something again, very interesting. Look at the NASDAQ 100 today. There was a period of time today where the NASDAQ 100 had 88 decliners, but was actually up on the day. This is very dangerous trade over here. The NASDAQ was not getting hammered today. And again, I'll point that out. And if you want to look at charts on the NASDAQ, there's a bunch of different ways to look at the charts. But one of the products that's fairly effective to look at would be the NDX. Not exactly a product I love to trade over here, but the NASDAQ fares extremely well. It's not even down a full percent. However, again, if you look at the NASDAQ 100, the number of decliners over here is substantial. It's because a handful of stocks were actually up on the day, and that's the Google, the Netflix, okay? Apple felt a little bit of pain today. Facebook, Microsoft actually up 1% over here. So all of a sudden, you got to recognize with that kind of advanced decline line, markets can get serious in a hurry. And again, it's much more important to look what's going on kind of beneath the hood than to just look at the obvious that the market was down. Yeah, the market was down, but a lot more risk came into play today than has been there, all right, since, 3-4 weeks ago. Again, the obvious energy sector gets hammered today. Okay, what does that mean? Well, again, on a sector by sector basis, and it's one thing you want to look at from time to time, go over here to the sectors. A 4% decline doesn't happen every single day. But generally speaking, you had your big sectors down today. Financials are to be watched very carefully. Again, coming into the next couple of days, specifically the ECB announcement. The ECB announcement is going to be Thursday, well before the market opens over there. So, as I said, look for that, not necessarily, okay, to be a big announcement. We're looking for catalysts out there. And that's ultimately somebody's just throwing a match into a pool of gasoline. And I'm telling you right now, the S&Ps, the rest of the marketplace, it's got gasoline right now, and it's ready to go. Instinctively, I'll tell you what and this is more an opinion than something I see on the screen. Instinctively, watch the upside move initially. Okay, there are a lot of people that are seeing the same thing. Good traders are going to see the exact same thing I am seeing today. What does that mean? They're going to hop in, okay, this evening, maybe a little bit later in the trading day today, and they shorted this market. That could leave them vulnerable to an upside move. So what we may actually see is quite interesting. Yeah, I'm a little bit bearish right now, okay? No doubt about it. However, I kind of feel like we could have a very fast, explosive, almost blow-off move to the upside, okay? Could last a day or two and fade quickly off of it. Look for shorts to get hammered very quickly to the upside. When I say very quickly, I'm talking you may have a day, you may only have a half a day where the S&Ps explode up 25 points and the bottom falls out over there. Look for it. Again, lots of traders are re-up in shorts. Bonds, okay? Bonds are signaling to most traders over here, whoa, watch out! These things are up 2 points today, all right? And never looked back. We're all the way back to the 164 region. So bonds actually took off to the upside. Not exactly the breakout move we're looking for. Could be follow through to the upside in the bond market. So again, the S&Ps, explosive move to the upside, followed by some volatility, which clearly I'm stating is to the downside. Thanks a lot, everybody, for joining us here at TheoTrade. Check out a class we're going to do tomorrow night, theotrade.com/iron up. If you were a member of TheoTrade, you're already enrolled for it. Just join us tomorrow night in the general chat room over there. It is, again, Wednesday, March 9th at 8 p.m. Eastern Standard Time. Iron up! Iron condors for you and me. Have a good night. Bye-bye.